Hey, it's Pete. Welcome to Stock Trading Pro. In this Stock Market Live, I'm going to blow your mind with something we kept talking about was mind-boggling. I'm going to give you the heads up right now. It's the main concept around how trading more will make you more. Now, very, very gutsy thing to say, right? Trust me, when you watch this video, roughly around 8 minutes, be worth every minute that you have to invest in the video, you're going to understand completely how big, profitable traders reduce their risk on a trade-by-trade basis in a heartbeat. You're probably taking much bigger losses than you need to. And more importantly, how to instantly eliminate the anger and negative energy that comes along with a losing trade, and how you get to the point where you add up these certain numbers that I'm going to show you, that once you get it slightly positive on the other side, you will be encouraged to trade more, because literally once you have that number, the more you trade, the more you make, regardless of what you make or lose on each trade. It's pretty exciting. Enjoy the video. Leave a comment below if you have any questions. Have an awesome day.
Unquote, learn the art of trade management, scaling in, scaling out, real trading, in addition to the app and to the academic side. Okay. This is, I think, the most important part here. And this is really what I was trying to get across today. Here, learning to scale back while the trade is going against you. And again, this is where the trading part of it's not black and white. Scale out. You don't have to get out of the whole thing. I do this all day long in both day trades and swing trading positions. I'm like, all right, it pulled back further than I want, but I still love the idea. So I'll go from 1,000 to 200, or I'll go from 500 to 100. I still want it in my position summary. While maintaining smaller positions and adding back when it turns in your favor has been a monumental difference for me. And Guy, if you don't mind, let's see, I stopped out of a large position on AFRM, started to rebuild it so much more than either of us being, yeah, exactly. This is the thing. It's everybody's like, no, I'm all in, I'm all out. You know, it doesn't have to, the market's fluid. So, and again, just Guy, I'm going to give you a little bit of props here, because I had mentioned this trade a while back. And this is kind of more the validation of it only takes one trade. Guy is the one who took this EQT trade when we game planned it down here in the 28 area and kept adding to it as it moved in its favor. So again, on the swing trading side of things, it's the same thing. It doesn't matter if it's a day trade that goes up 5% in 1 hour, or a swing trade that you finally nail after a couple that didn't follow through. This is the kind of follow through you get where the stock almost doubles and you have the right share size. It can turn into a really sweet trade. So this is some really good stuff. I would definitely screenshot this, everybody. This is the real stuff. This is what trading is all about. This is real trading. This is not page 275. Don't ever violate that. You know, that kind of thing. Let's see. Richard's saying, how many stocks should we be in during the day? That's completely based on your experience, Richard. There's really no other way to put it. I encourage you to trade. If we're talking day trading, Richard, if we're talking specifically day trades, I encourage you to trade more than one position. For number one, you'll be managing now the two positions versus the one, where one might be in the money, the other one might be dancing around, and you're going to be tending to hold the one that's not moving against you, but not moving in your favor that much. But the more important reason for trading more than one position is you are accelerating the speed, number one, of learning and making decisions, but number two, you're accelerating the speed of your edge playing itself out. And what I mean by that, and this is just basic math, if it's going to take 10 trades as a basic number to allow your trade to play itself out, the faster you can get to 10 good trades, the faster you're going to accelerate how fast you're going to make money, assuming you took 10 trades. So if you're taking one trade today, and then one trade on Wednesday, and then one trade on Friday, there's nothing wrong with that, but you're at 30% of letting your edge play itself out. But if you're trading two good positions, and then the next day maybe you trade 3 good positions, you're allowing your edge to play itself out much faster. And that's why casinos don't have one table. There's no other way to put it. They have thousands of tables and thousands of machines because they're letting their 4% edge, or whatever that edge is, play itself out over thousands of trades. You will make, and take this with context, please. Please take what I'm about to say in context. The more you trade, the more you will make. assuming you have an edge and assuming you follow the edge. So you got to put all three of those statements in there, because the very definition of having an edge, the more you trade, the more you're going to make. That's the whole point of expectancy ratios. Expectancy ratios are you make 150 or you lose 80. So the math on this, it's a very simple breakdown here, but I'm just going to keep this high level, but it matters. So let's say that all of the trades you took that match your criteria, all the winners combined, you made 150, all the losers combined, you lost 80. So what does that mean? And this is really going to back up the statement that I just made before. And this is going to be mind-blowing for some people. I'm going to pause for dramatic effect right now. Okay. So if we could acknowledge that you made 50 trades in May, and these are your numbers. These are your real raw numbers. So obviously these numbers can be much bigger or smaller. It doesn't matter. Let's say those are your real numbers. The expectancy ratio gets you to the point where you say, okay, no matter what trade I make, whether it's a winner or a loser, but if it matches my strategy, out of all of my trades, I know I'm gonna net $70 per. I'm gonna net $70 on average per trade. So what does that imply? That implies if you make 10 trades, you'll make $700. That means if you make 100 trades, you'll make 7,000. If you make 1,000, the math just keeps getting bigger. That one part of today's call is worth every minute you're in our community. That is why professional traders trade their butt off, because it's not about the one trade. It's about the bunch of trades that add up to the ROI. But when you add this into the equation, it's mind-blowing. It's literally mind-blowing in so many different ways, because now it doesn't matter if the last trade made or lost money. Especially it doesn't matter if it lost money, because the only thing that matters is, did you keep the loss to what it was supposed to be based on your risk? If you do, and improve what you make on your winners, then this number starts to increase. And then the more you trade, the more you make. That's professional. That's real trading. Raise your hand if that's mind-blowing, because this is really the foundation of everything we do. Because when you keep your losses small, learn how to make more on your winners, you get an average of what you make per trade, combining all of the winners and losers. And if this number is positive, that literally means the more you trade, the more you're going to make. So getting back to the point about how many open positions should I have? Well, it depends. How much are you positive yet? And how much are you only taking good trades? That one section of what we just talked about, when I learned that, completely changed everything, because it took all of the negative emotions out of a losing trade, because it didn't matter anymore trade by trade. My new goal was find great ideas, cut my losses, and continue to learn how to make more of my winners, so that this part of the equation gets skewed, so this part of the equation grows, because this part of the equation is capped. That's mind-blowing when you really let that sink in. And again, I'm going to say this in context. When you understand that and get this number to positive, it literally comes down to the more you trade, the more you'll make. Literally, not even figuratively, not hypothetically. Literally, because you have the raw data to back it up. That's mind-blowing. When I learned that, it instantly said, cut your loss, take every trade, cut your losses, learn how to hold the winners. In a heartbeat, everything changed in a heartbeat.